Um, so, as I said, I'm Michelle Norris, and today's presentation will examine the Equal House research on financing social rented housing in Europe. Just the agenda for today. The presentation today draws on the work from Work Package 5 of Equal House. So Equal House is divided into 9 different sections or work packages. And this work package, in which my colleagues and I are involved, looks at using subsidies, regulation, land and services to make housing affordable. And in particular, today, we're going to focus on the work we're doing on financing mechanisms used across Europe to support social housing development. In other words, the construction or purchase of social rented homes. And we're particularly interested in hearing your experiences and having an input from you, the participants at today's meeting, into the report we've produced. And also, I want to tell you about the next phase of the research we're doing on this issue of financing social rented housing, and to request you to contribute your expertise to help shape this phase. So this phase will involve detailed case studies of the different mechanisms used to finance social rented housing around Europe. And we're particularly interested in looking at cases that can inform policy learning and also the transfer of policies and instruments for financing social rented housing between different European countries. So we'd really like your input into identifying case studies. So we'll have some polls throughout the presentation to give you an opportunity to input. Then we'll have an opportunity for questions and answers. And then my colleague, Equal House colleague, Barbara from the University of Warsaw, will be telling you about the next ECHE meeting, which is scheduled for the end of May. So I mentioned that today's presentation draws on the work we're doing as part of Equal House Work Package 5, using subsidies, regulation, land and services to make housing more affordable. And this work package looks at 4 issues. The first one we're examining today is supply side instruments used to provide social housing or finance social housing, if you will. We're also doing some work on land and planning policies used for social housing. Then the third theme is regulatory and tax policies used to support housing affordability. And then the final theme in this work package looks at housing and personal allowances aimed at promoting affordable housing. So just to acknowledge that in addition to myself and colleagues from University College Dublin, this work for Work Package 5 is also being carried out in collaboration with Julie Lawson from Just Cities consultancy in the Netherlands, and also colleagues from the University of Glasgow in Scotland. So just to acknowledge the contribution of Alice Early and Mark Stevens to the work we're presenting today. And these other colleagues will also be working on the other themes in the work package. And we hope to have another ECHE meeting, probably on the work we're doing on land and planning policies towards the end of the year. So if you're interested in that, we'd encourage you to come along and attend. I'm now going to move on and look at the report the preliminary report we've done on financing social housing in Europe, and just briefly introduce the different topics covered in the report. So the report looks at the sources of finance for social housing in Europe, in terms of, does the money come from the market, from governments, from tenants, from social housing providers themselves, and also the instruments used to disperse the finance. Is it a loan? Is it a grant? Is it equity finance, etc.? We also look at the organisations that finance social housing development around Europe, And then we present an analysis of the effectiveness of these arrangements. In terms of the findings of the report identifies 4 primary sources of finance used to develop new social housing in Europe. As you'd expect, government finance is a major source of finance for social housing. So is finance from the market. But in many countries, particularly where social housing sectors are large, internal finance from within the social housing sector is quite a significant source of finance, or you could also call it social landlords' own equity contributions. And also in some countries, non-profit sources of finance are significant. So in terms of government finance, the most common mechanism governments use, or instrument governments use for dispersing finance to social housing providers, are public grants. Quite a lot of governments around Europe provide loans to social housing providers, sometimes because social housing providers can't get loans from the market. So the purpose of government lending is to fill that gap in finance. But also governments can generally borrow at much lower interest rates than other providers. So governments often provide cheap loans, below market rate loans. So that adds a form of subsidy to social housing providers. Where social housing providers borrow from other sources, say from market sources, governments sometimes subsidize the interest on those loans just to keep interest low, or sometimes to even out interest rates. So social housing providers don't face the risk of interest rates going up because often the dwellings are rented at below market rates and tenants would not have the capacity to repay, pay higher rents, to pay higher interest rates. This form of subsidy used to be very common in the past when interest rates were higher. It's less commonly used now, but still is used in several European countries. Also, on occasions, governments provide guarantees of social housing providers' loans where they're sourced, say, from the market. So the government agrees that to guarantee repayment of the loan in the case that the social housing landlord may not be in a position to do so. Sometimes these are paper guarantees, in other words, commitments to repay the loan. Sometimes governments have funds, special funds that are set aside to guarantee repayment, called loan guarantee funds. Now, in addition to these sources of finance, which we examine from government, that we examine in the report, governments often provide land for social housing at low cost or free, or sometimes the land is leased, and that's examined in the next part of this work package. And then tax subsidies for social housing provision are very commonly provided around Europe. Generally, social housing providers are non-profit organisations not liable for business taxes, and that's also examined in another part of this work package. So government finance is very commonly provided for social housing development. In some countries, it's nearly all finance, but in most countries, it's a part of how the sector is financed. Another very common source is market finance. So social housing is most commonly financed from the market using commercial bank loans. Less commonly, social housing landlords raise bonds themselves on the stock market, or sometimes commercial banks or other organizations may raise bonds on their behalf. That's more commonly used in countries where the financial system, the commercial finance system, is very well developed. In a small number of cases, we've seen use of sustainable finance, so-called ESG, environmental social governance finance for social housing, and that's usually raised through the bond market, and that is becoming more common because social housing is seen as an equitable type investment option, and also quite a stable investment option with guaranteed returns. In some countries, primarily in the UK, private investors have taken equity shares in the provision of social housing. So they've taken part ownership and it's funded in that way. And it's also increasingly common across Europe that private developers are required to provide land or dwellings for social housing when developing private developments. And as I mentioned, that's examined in the next Equal House report from this work package. The third source of finance for social housing is internal finance or own equity provided by social landlords. So some of this in some countries is provided by down payments or security deposits paid by tenants. In Denmark and Austria, for instance, they're quite substantial, and they provide an important source of finance for social housing developments. Sometimes in some countries, social landlords have guarantee funds to guarantee the repayment of loans. And in many countries, social landlords are required by the regulator to step in and take over the loans of other social landlords that may be in default. So in quite a lot of countries, the social housing sector essentially mutually guarantees loans. So those types of supports from within the sector, guarantee funds and mutual loan guarantees, enable social housing landlords to get access to borrowing and also decrease the type of borrowing. In many European countries, rents play a really central role in funding the provision of social housing, and they enable social landlords to borrow money for that purpose and to repay the debt. And over the longer term, rental income accumulates, and social housing landlords in many countries are required to ring fence that additional rental income in a particular fund, or they may collectively contribute to a national fund, and that money then helps to cross-subsidize new social housing development. So those types of revolving funds, they're called, are becoming increasingly common around Europe. Denmark has a national fund, for instance. Latvia's recently set one up. There's also one in Slovakia. And then finally, non-profit sources of finance are used in some European countries. And the main source of non-profit types of finance is through saving schemes, where households save in non-profit institutions, and this money is then lent for social housing development. And probably the best known examples in Europe is the French system of the Livret A savings accounts, which are tax subsidized savings accounts. French households save in French banks, and they're accumulated together by a national public bank and then lent out for social housing. And also in German-speaking countries, Bausparkassen savings banks are also very common and play a role in funding social housing. So they're all the mechanisms we identified to finance social housing. I now have...
Okay.
Thank you very much, Dara, and thanks to everybody who replied. That's enormously helpful to us, so we will follow up on those examples. Prior to this meeting, we circulated a survey to ECHE members to ask about the use of additional sources of finance in the different countries in the EU and the different countries and regions of the UK. And that fed into the report we circulated. So on this slide, I've just summarised the results of the survey. So you can see that everywhere we have a tick yes, that indicates that source of finance is used to finance social housing development in the country in question. And where we have an X, it isn't used. So you can see from the slide that we don't have results for every country. So I'm now going to open another poll and ask you, if we don't have results for your country, would you be good enough to provide us with the information? So thanks everybody again for responding to the poll and for your willingness to provide us with the missing information. I should mention the table doesn't include information on Greece and Cyprus, because when we circulated the poll, we were told there's no new social housing development going on in those countries at the moment. So that's the reason. It wasn't that I was ignoring our friends from Greece and Cyprus. That's the reason they're not included in the table. They will be included in the other stage of the research. So in addition to the information on the sources of finance for social housing and the instruments used to disperse the finance for social housing, we also circulated a survey asking members of the ECHE which organisations provide finance for social housing, and this table sets out the results. So as I mentioned earlier, government are key sources of finance for social housing, particularly in the countries where the sector is smaller. They tend to be the only or main source of finance for social housing. In a small number of countries, this money is provided directly by central government or by a central government agency. That tends to be the system in smaller European countries. More commonly, municipalities or local government are the main source of government finance. In some countries, public development banks, in other words, government banks, are particularly important sources of finance for social housing, obviously particularly important sources of loan finance. And I should mention that not all this government finance comes from national government, and the European Union plays an increasingly important role in financing social housing through European Union grant and loan schemes, and in particular through the role of the European Investment Bank, the European Union's Public Development Bank, and also the European Council Bank. The Council of Europe Development Bank is an increasingly important lender for social housing. In some countries then, government loan finance isn't dispersed through banks, but governments set up other agencies, specialist agencies for this purpose, and these are called special purpose financial intermediaries. So that's the case in Ireland, for instance, where a special purpose financial intermediary called the Housing Finance Agency is the main source of funding. So when commercial market finance is generally provided through commercial banks, as I mentioned earlier, sometimes social housing providers go direct to bond markets to raise bonds themselves. That tends to be the case in the larger countries, and also where social housing providers are much larger, and they can get a credit rating and raise bonds directly. In other countries, banks or these government special purpose financial intermediaries raise bonds on their behalf. And then I mentioned also in some countries, savings banks or other similar non-profit savings institutions are important funders of social housing. So you can see again on this table, we have results for some European countries, but not for every European country. So I'd now like to ask your input just to complete the information. Now, after completing this survey of the different sources of financing instruments and financing organisations across Europe, the report also presents some examples of these different instruments and organisations, and we call these policy snapshots. So we have different examples for different sources of finance. An example of government finance is the European Investment Bank, I've mentioned already. In Poland also, the Polish Development Bank is a very important source of finance for social housing. In the Netherlands, government has a system of both paper guarantees and social guarantee funds to support social housing development, and also so does the social housing sector itself. So it's both the guarantee system in the Netherlands is both a source of government finance and also of non-profit finance. In terms of internal finance from within the sector, I mentioned revolving funds are a very common source of internal finance for social housing. And the examples of these we pull out in the report are the Danish National Social Housing Revolving Fund, which, as its name implies, is a national fund used to finance renovation, retrofitting for energy efficiency of social housing, and also contributes to the cost of new development. Colleagues in Slovakia also have a social housing development fund that we use as a policy snapshot. And more recently, the Irish government has established a new cost rental form of housing that's aimed at people whose incomes are slightly above the income limit to access social housing, that also operates on a similar model. In market finance, the examples we use are the use of Sustainable Development Goals, UN Sustainable Development Goals housing bonds by NWB Bank in the Netherlands, so a form of environmental social governance investment. The Housing Finance Corporation in the United Kingdom both distributes state funding and also raises bonds on behalf of social housing providers and parcels them out. So it is a special purpose financial intermediary organization that acts as a bond aggregator. We mentioned the National Development and Social Fund in Malta that uses money from private investors associated with the Maltese passport scheme and is now a major funder of social housing development. And we mentioned public-private partnerships for social housing provision in Ireland. And then the non-profit examples we mention are the Livre A savings accounts, which are the main source of loan finance for social housing development in France, and finance for savings banks for the development of cooperative provided social housing in Germany. So several cooperatives have their own savings banks. So these policy snapshots are dispersed throughout the report. We hope to extend them a little and do short 1 or 2 page guides to each financing instrument that will set out some examples and also outline the advantages, disadvantages, strengths, weaknesses, limitations of the particular policy. But we are aware that the examples we have used for policy snapshots are not evenly dispersed around Europe. We're obviously, as academics, very dependent on information we can find in the academic literature, and as native English speakers, we're often overly dependent on the English language literature. So we're very interested in hearing whether you have any suggestions for additional policy snapshots we can include in the report, particularly from countries we haven't covered in the examples. So particularly from countries outside Western Europe, maybe the countries of Southern Europe, the countries of Central and Eastern Europe. So if you could provide us with any additional examples, we'd be really grateful, and we'll incorporate them into the next version, into the short policy snapshot guides we're planning. And we also have a map of Europe on the Equal House website that flags up different examples, and so we'll include them there. Thank you. So the final, and thanks to everybody who suggested policy snapshots. So that's really enormously helpful. So we will follow up directly on that. So the final part of the report looks at how effective these instruments are, and it kind of presents quite a preliminary analysis of this that we hope to drill into in more depth in the next phase of this research. But I'll just flag the kind of key themes in the analysis to you first of all. So in terms of how effective these instruments are, in some way that depends on how effective financing social housing provision is as a solution to housing unaffordability compared to the other options available to address this problem. So the major benefit of providing social housing to address unaffordability is it adds to housing supply. It provides affordable housing, not just to the households that gain tenancies, but it can help deal with imbalances within the wider market by removing households from the private rented sector, help reducing demand for property to rent or buy on the market. So it can help balance imbalances in market supply. So that's the major benefit. The major weakness, obviously, this is relatively slow option, slow solution. So it takes quite a long time for governments to finance and then provide social housing. So it's a far less quick solution than, for instance, providing housing allowances to enable households to rent privately. So the effectiveness of these instruments reflects the effectiveness of this overall approach to resolving housing unaffordability. Then the individual financing instruments, the individual instruments used to finance social housing development have inherent costs and benefits. Obviously, government finance for social housing, the effectiveness of the finance depends on the particular instrument you're using. Loans can be very useful, for instance, not just in financing social housing, but imposing certain discipline on social housing providers, because they have to let the dwellings, manage the dwellings, collect the rents in order to pay back the loans. So some instruments have additional benefits on top of providing social housing, but obviously the availability of government finance may not be assured, and governments may not be willing to finance social housing. They may have other policy priorities to spend money on. So in the report, we look at the advantages, disadvantages of each of the financing instruments. Now, one kind of complexity about trying to assess the financing instruments is, generally speaking, they don't operate individually, they operate collectively. So in the vast majority of European countries, there's a whole range of sources of finance used to finance social housing and a whole range of different instruments. So if you're assessing their effectiveness, you have to look at the relationship between the two. So one example, for instance, is that government guarantees or government guarantee funds may be used to enable social housing providers access finance from the market. So in that case, those two supports are interrelated. Often government loans are subordinate form of debt. So in other words, the government may give a loan to a social housing provider and agree that in the event the social housing provider can't repay its debt, that commercial loan providers will be repaid first, and the government will take second place in terms of repayment. So those forms of government loans can enable social housing providers to access market finance. So the different instruments work collectively, and you need to assess them from that perspective. And then finally, the effectiveness of the different instruments depends on the different context in which they operate. So some of the more complex private finance instruments like bonds, those types of finance are only available in certain European countries. They're not available in others. They're only available to certain types of social housing providers where they're very well regulated. They're large enough to be able to raise and manage this finance, for instance. So the effectiveness and appropriateness of the different instruments depends on the context. So I now want to move on and tell you about the next phase of the research. So we've done this big review of the literature and evidence and done surveys on the types of instruments that are used to finance social housing provision around Europe. We're very grateful for your help in filling gaps in the research. But we also plan to conduct more in-depth research on 5 financing instruments in more depth. And we're particularly interested in instruments that have been used successfully in one part of Europe, and then other European countries are also looking at using these instruments. So we're particularly interested in looking at the potential for transfer of successful solutions to housing unaffordability between European countries. So as I mentioned, we plan to do 5 case studies of different financing instruments, and particularly looking at their transfer between European countries and how successful it's been. So we're interested in your input in selecting potential cases that we could examine. And these are the kind of broad criteria we're planning on using to identify case studies. So we're interested in having cases that, a variety of cases that operate in different contexts. So we're interested in cases from different housing systems, countries with social housing sectors that are large, countries with social housing sectors that are smaller, countries with different commercial finance systems, different welfare states. And in particular, in relation to welfare states, one of the critical issues is whether housing allowances, subsidies are available to tenants to enable them pay rent in social housing, because that has a huge influence in underpinning how the sector is financed and whether social housing landlords can repay debt. We're also interested in identifying cases that support the provision of social housing for rent. That's what I focused on today in my presentation. But we're also interested in the financing of housing for sale to households that can't afford to buy in the market. And in English-speaking countries, this is often called affordable housing. Different terms are used to describe it in different countries, but we're interested in looking at how this can be financed. We're interested in looking at a variety of different instruments, loans, grants, bonds, all the different instruments I mentioned. We're also particularly interested in looking at new innovations, if we can identify any new innovations. I mentioned we're interested in looking at policies that have been transferred between different countries. I mentioned the Irish cost rental system, for instance, earlier on, and that is essentially a copy of the cost rental system provided in Austria by the limited profit housing association. So that's an example of successful transfer of a policy across Europe. We're interested in looking at successful examples like that, but we're also interested in examples that weren't as successful. So do we have examples where the policy was formally adopted as a government objective? We'll do this, but not really implemented. Or do we have examples of cases where the government examined an option but didn't implement it? And then we're interested in looking at the impact of these mechanisms on the ground. And we want to have a range of examples of policies or instruments that have really been effective in improving housing affordability, and then also some that have been less effective in practice.